Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. We're going to have a special session today on integrating multiple time frames, the auction market theory, market mechanics, and how you might be able to put the pieces together. And this is based on the methodology I've shared in the Bookmap Discord Trader Lab community. And the Trader Lab community is a group of like-minded traders who come together to leverage their collective experience, and there's no cost to become part of this community. It is traders working with traders with a diverse background. Senior trader has over 50 years. I've got 45 years of trading, both professionally and otherwise, sitting out here with you, and the full range from newer traders to, shall we say, more seasoned traders. Full range. And the thing about the Trader Lab, what do we focus on? It's integrating Bookmap Orderflow tools. In other words, high-tier order flow tool with auction market theory. How does the market work? Why does it do what it does? And how you might get in alignment with it. And all this is overlaid on something called a volume profile. And the thing about the Trader Lab is this community is about helping each other get better. It kind of takes a village, I guess is what they say, in order to leverage the experience of all the participants, and it becomes a mutual learning and sharing experience. It takes repetition, it takes intentional practice, and even discussion, interaction, and even at times disagreement, because that causes thought and over time, change in perceptions of each individual trader's beliefs. You know, we all believe certain things when we come into this business, but there's quite a gap between what we believe to be true and what is true for this environment. So the Trader Lab exists to help you develop further on your potential career path. And if that's your interest, then the Trader Lab and the Bookmap Discord community might be for you. Now, grab a pen and a piece of paper. We're going to be going over some stuff, and it's really important that you focus. If you're interested in understanding how the market works, and it's not based on your indicators, which do have a place. If you're interested in understanding how the market works and learning how to differentiate potentially your outcome from other traders and maybe establish a business in trading, then Trader Lab's for you. Let's take care of business. Let's get into it. We have a lot to talk about. Grab a pen and a piece of paper because there's going to be statistics here. And by the way, can I get a, okay, everything is good. Thank you, Stephen. Just checking on the technology, if you will. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and a piece of paper. And if you're just visiting here today, you will want to write down what you see and review this stream, which is available exclusively to Bookmap Discord Trader Lab participants. This is it. This is an overview of this process as much as I can squeeze into the little bit of time we have available together. Now, I'm going to show you, let me try to move some things around here, not make big trouble. This is posted, now this is the Trader Lab chat community. You can see it's very active. There's all kinds of stuff going on. We talk about this higher time frame. Now I'm going to explain what you're going to see here. If I can find where I just was, hold on. Yeah, here. Okay, I'm going to explain this, but first of all, let's look at this. 7:49 a.m. Central Time, pre-RTH open. Guys, be aware that we're sitting on top of a micro-composite volume point of control. That's what this is, 79.25. This is a composite, and what it is when we broke out into the previous consolidation, we extended out, and then gradually we went up, created a swing high, and I'm using this to anchor a swing low. So all the volume in here, this is a volume profile, and what it's measuring is where's the high volume, the peaks, and then the troughs are the low volume. And if you want to think about what this is, in multiple time frames of fractals, this is a distribution. Too high, too low, high volume. That becomes resistance if I get below it. And you can see how once we broke below it, it's resistance. We come back towards it, it's resistance. It's too high. We come back towards it, it's too high. Now, if we go from the other side, where's too low? Well, this was too low. Who knew? And what happened here, so, and I'll explain more to you, is we took all the longs who are in this leg out. It was the Acapulco cliff dive is what I call this. But then look at the tail. What happened was we blew out the longs, and keep that concept in mind. And then we came back to the high volume. And then we went too high, and we came back to the high volume, and we went too low. Now I'm going to explain a little more, but let's come back over here. So the market got long yesterday, okay? As you know. So, but what happened in the morning? Now this is today. So let's look at yesterday. We had sellers the day before. So that means the market's short. We open higher. We squeeze. Okay? We squeeze up. So we squeeze the shorts and we get more. So initially longs, and then we sell off. Now we have shorts in the market. What do we do yesterday? Selling in the morning, we come down here to a low volume level, outside ledge, and I was going for 32. If you followed the stream, I was actually going for this yesterday. Well, didn't get there. And here's the other key piece, and this is what kind of gives you from a market mechanic point of view. If we go down, so we have shorts in here, we open higher, we squeeze some shorts out, get longs right here. Then we get sellers, we go down. Now we have shorts in the market. What do we do today? We go down. So I have shorts here. This is yesterday. And then we close up on the high. What are we doing? Market mechanics. Market goes up to go down. Market goes down to go up. Market goes up. This is yesterday. To go down. I should say, sorry, wrong. We gapped yesterday. So opens lower, goes down, gets more shorts, closes on the high, squeezes the shorts. What do we do today? Now we have longs in the market. What do? We open lower. We take out the longs. Now what are we doing? We're taking out the shorts. That's called market mechanics. Market goes down to go up. That was yesterday. Down to go up. And then up to go down. We need to be aware from which side we might trap the other side. Often the initial direction is the trap, but since we're in balance, it can abuse both. So what that means is balance, which means this is the fair price for this whole consolidation. We can slosh on both sides of it. And that's the plan for today. So we're still consolidating. Also, yesterday, we failed to take out stops from Thursday and Friday. This is the hint. We came down yesterday, and my target was I was looking for it to come under here, take these stops. So that's why I had a 32 target. It didn't get there. So here's the narrative. If this, then that. If not, then what? If we don't do something, because there's sell stops here under this, and if we don't take it out, what does that tell you? It tells you up. What does it do for today if we open low and go lower? It tells us up. So this is all part of the plan. What does it mean? So 60, and this is all at 7 in the morning, 60 is important below. Now, grab your pen and paper. I'm going to give you statistics. This is Trader Lab methodology, and anybody can learn this. Now, you got to do the work. You have to vet it. And what I'm going to show you then is trades when we get into the RTH, when I go over it. But I want you to see. Now, here's something else I do. Very simple. I draw this. This is a scenario. Down first, then up. Or if we went up first, then down. And I have my levels written out. So, and 45 is a level. And then we also have, and then we have the levels above. So it's nothing fancy, but I just scribbled some lines, and I've been doing this forever. 60 is a key level. It was support. That was, remember, a wall on the way down. Anyway, all this is going on in the Trader Lab. So you guys are all invited to Trader Lab. You can use the link in the bottom of YouTube. I'm getting my next target taken out at yesterday's high. Now, here comes the statistics. Anyway, I hope you get something from this. This is the higher time frame or intermediate time frame. And we are going for yesterday's high right now, which is here, and then up to here potentially. So my next target, not a recommendation, and I'll show you all this, is 86. Not a recommendation. I'm sorry, guys, I got to pay attention right here. Okay, I just flattened out. I can't be concentrating on this. Anyway, okay, we opened lower inside of yesterday's range. Write these down. Now, I'm spending more time on the front end so you can understand kind of what this is all about, what trading is in the sense of a methodology that anybody can learn. Let me get this out of here. Okay, so let's come back to those levels. 58.60, remember, probability. ETH low. If we open here and come down first, remember what we're looking for. Get sellers and then squeeze them out. So this is my area for my first long. Now remember I said 45. 45, next level. This is auction market theory. Now auction market theory, and then yesterday's low. And if we take this out, then, all bets are off. So I have two areas to consider along. 60, because we have the ETH low, 60, higher time frame auction level, and then 45. Let me show you again. 60, and then 45 is right there, that green line. This is coming off a higher time frame structure or chart, if you will. So I have these over here. Now let's come back. Now there is, write these down, an 85% probability will take out the previous day's high or low. You will notice we did not take out yesterday's low. And you will notice 45 and 60 were my levels for getting long. Lovely. Let's keep going. Getting to the overnight mid has an 83% probability. Getting to the ETH, overnight volume point of control, which is right under yesterday's high, just follow the yellow brick road. 83% probability. And remember, 85% probability to take out the previous day's high or low. We failed to do it here. That puts yesterday's high on the hit parade. Then what? 86 is another target. Where did that one come from? Now, 85% probability, remember. Can't read these things, but it's up here. There. So I want you to see how all these things integrate. Now you have the statistics. This is Trader Lab. Yes, and you have to do a little work. Yes, you have to educate yourself. And yes, you got to understand how the market works. Then it's structured trades that you overlay on this, and I call this the chassis. So all this is done before the market opens. What we don't know is what's going to happen. That's part of the thrill of being in a random environment. And yes, it is random, and write that down. We are dealing in an uncertain environment, and psychologically, it's the last place our reptilian brain wants to be. Last place. Because it's like running into the burning building. And we're wired not to do that. So let's take a look now. So now we're going to go into any questions, by the way, post them. If you're in YouTube, if you're visiting, thanks for visiting the Trader Lab. Hope you're going to get something from this. This is different. And it's different because most retail traders don't do this and never have the opportunity to learn it or to think differently. They pretty much all think the same, and they all pretty much do the same behavior, which is indicators and time frames. And if you spend any time in this business, I created a video called Trader Groundhog Day. So I'm going to show you the first trade. So for me, my first trade's a long. Where's my location? As you saw, I posted in the chat, 60. It's right there. And I have the ETH low. I'm opening lower under settlement inside of yesterday's range. So yesterday's high is above, yesterday's low is below. RTH open, helmet on. Here we go. So now what? Remember my plan. If I go down first, I'm going, and it's all written out, I'm going to get long. So my first level is here and here, 60 being the more important level. This is not. I mean, it's important, but this is, I'm looking for it to get under here and check. So let's look. Let's see what happens. ETH low. This is called the developing volume point of control. Now, I'm doing things in what you guys think is multiple time frames, right? I don't think of the clock. I really operate more in a fractal or not time-based. It's behavior or participant-based. So what does it take for this to happen right here? You know, how long is this? 12 seconds? You see, 10 seconds? So why am I waiting a minute or 5 minutes? It has nothing to do with this. What this is about, and this is order flow, is what do these participants think of this price? Now, remember, the market is long from yesterday. What's in the market? Longs. What else is in the market? Sell stops. So if I open lower, I can get the following: long liquidation and new shorts. And I'm looking for the new shorts because they become the fuel to become buyers. So when you open lower, now, of course, it doesn't mean, you know, anything, right? So let's look where we come. This is my level, and this is too high. This now is, and I call these, I made these terms up. I've been doing this a long time, and nobody that I was aware of was trading like this at the time, so I created things. What else are you going to do? So this is the retail price. Think of the yellow line as high volume. So if the high volume's here, and this is shopping, if you know how to shop, you might know how to trade, or at least be able to connect them together. If this is a store, let's call consolidation store. Now, this is not to insult you. This is just to help you relate to it. And I understand that this is where the interaction is between buyers and sellers. I have my buyers here. Why isn't the market going up? We see a green bubble. That's delta. That's aggressor. But there's another part of delta that we don't see. If we have aggressors and we don't go higher, that means the passive side that we can't see is taking the other side of the trade. What does that say about this retail price? That's too high. Now my sellers leave the store. I always think of this. Let's think about shoppers. I'm not paying that. This is your pint of ice cream Saturday night for the movie. You'll pay anything, right? They leave. I'm not paying that. So it's language. Come back and check the mid. Now what? Now you have a couple choices here. We have, this is a good probability to get, and this is our support. So let's watch. Come down. So I'm looking for the long. Now right here, this VPOC migration suggests the following possibilities: down or mean reversion and reversal. So I'm looking here, and I have more volume here. What does that say? Too high. And what does this say? New retail price. But suppose, possibly, this price becomes too low. Now, I don't know. We know that's too high. And right here, if this is still too high, we will do this. Instead, we do this. I see my buyer. I have microstructure right there. By the way, I'm drawing these lines for you. I don't draw them for me. They're in here to help you see. Now, I'm also going to throw one over here just so you kind of can see something. So this is resistance and this is support. Break high. This says potentially too low. I pull back here. I get long here. My stop is now under here, and my scale is here. Why? if that's too low and this is too high, I'm going to get risk neutral ahead of this level. Because why? It was too high. It's another way to think of support and resistance. So long, scale. And then let me show you the, I'm going for settlement up to 78, up in here. This is my trade plan, out the top and up here. Next target, right there. And you know I just exited my longs up here. But there was trouble before that. So I'll tell you the trouble. So long, scale, going for settlement. That's my long trade. Break above it. This acts like support. Let's just see what it does. Notice the behavior. Too low, too high. Break, long, scale, pullback. You know the concept. Resistance can become support. Support. Now, possibilities. You don't hold this, you come back to mid and VWAP. You do hold this, next target. That's my trade, and I'm following a trade plan, and that's life in the fast lane. So what happens here? I'm risk neutral. My stop is under here. So the worst that happens to me is I scratch the trade. Now, I come back. This is my support, don't forget. This is support. Now, there's another thing we know in the Trader Lab, and that is something called opening swing high, opening swing low. Opening swing low. So I know if I squeeze this leg out, right, and their stops are here, that if I get into two sides, I can come under here, pick these guys off, and as long as I'm above here, it might be a long. So let's watch. Right here, I come down. It's my support. I see the bounce. I come down to my, what? 60, right? There. This is all auction market theory. And I'm going, okay, please hold the 60. I see the buyer. What I did here is I added, and then my goal is to get here. I got stopped out. Okay? I don't mind telling you that because that's what happened. So, and then it was, grinding of teeth and the rest of it. So right here, this is my support. It broke below it. Now, when this happened, I'm going, okay, I got to get short now because 45 is my next level. This. And I'm going, I got to get short. Where am I going to get short? Let's see if there's a short. I did not get short. I didn't have a way in. And once I got taken out, I knew I was off sides. I'm fine with that. I would like to have gotten a short, but it was already here. And then if I took a short, this is the only place I'd be able to get in, right here. And then my stop would have to be up here or here. So in here. I didn't take it. I mean, it's outside of the risk I do. I like to take for my trading, for the number of contracts I trade. So next location. Now, the other piece to this is, remember, yesterday's low and 45, as you saw on my trade plan. And let's just go back to where the 45 came from real quick. Here's the 45. It's right there. That line, green line, 45. So, and that turns out to be the low of the day. Lovely, isn't it? Who knows? This is Trader Lab. So now we come down here and I see the selling going to zero, right? What else do I see? Buy icebergs. But I wait. I wait because I have this. So since I don't have a short and I'm not going to FOMO in, I'm looking for the long. Let's look. So here I get to my level. Now the fact that comes to a level does not, I don't enter here because I can't. Because why not here? Well, but now I have alignment. So, and it's, for all I know, we're going to keep going. Remember, nobody can predict anything. So I see a reaction at my level. And there's my buyers. And this is microstructure. I'm going to draw a little line over here so you can kind of see what I'm looking at. So this is the chop, 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 right? And we got chop, chop all over the place. How do you differentiate? Well, for me, this is how I differentiate. because this is a key level. And again, I don't know if we'll just pull back and go through it. I mean, this is trading, right? And if that happens, I take a stop. So let's look. So now I have more volume here. And this is my last area where my sellers right here were in control. There's my sellers. Now here is another area where the sellers are still in control and we go down. So this is resistance here and this. So this is more meaningful to me. And I'm using the profile because I'm looking at what these are consolidations and the high volume is in here. So it's the same concept as what this is in the higher time frame, high volume. And in the microstructure on the way down, when I was marking these variable high volume nodes, high volume. So as we go down in time frame or fractal, we're looking at high volume, break lower, micro high volume, seller, high volume, break, test, too high, high volume, break, too high, break, too high. What's over here? Micro. So what I'm doing with these, and this is called trading in fractals, what I'm doing is I'm following the auction. And write this down. Think Russian dolls. They're Matryoshka dolls. They're inside each other. So all multiple time frames are, with no clock, is they are fractals or behaviors that are generic inside of each other. So if I'm thinking the trend is down, which right at the moment it is, but I'm coming to support, I'm going to look at it. And I'm going to say, well, right here it was too high because my passive side is still selling. My passive side is here, 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 going to zero. Here, going to zero. Here. Maybe it's just a rotation here. Right there. Going to zero. What does it do? It does something different. Now I have a suspect and I'm in alignment. Now let's watch. Resistance is here. Break above. Now, VPOC migration. Now, this throws a salami into the whole thing. Let's take a look. Because what this is suggesting to me is that now we're going to go potentially lower. What is this in the microstructure? Too low. There's my buyers. What is this in the developing daily time frame? Too high. If I come down, here's what can happen here. Same thing as what happened earlier up above. I can push off, come down here and test it. If this is too low, I come back and cross above, and then I'm back on the longs. If I can't get above here, then it's going to get ugly. So I'm looking right here. I'm looking for out here. 1 second, guys. Whoop, 1 moment. I got some noise out here. Big truck going by. Okay, so this is my resistance. This is my support. Let's watch. And remember what was up here. Sellers. Sellers. So I've got this line here, and it's aligned with these sellers now here. Passive. The buyers are here. Nothing is going on there. This is the retail price. And if it's not too low, we'll push off and keep going. So I know I need to hold this and come across this, and then I'm out of the woods. And don't forget, I got 45. Let's watch. See? Now I got to get long. So now there's a couple ways to do this. We know this is support. We know this is support. We know this is the retail price, and we know we can fall out of this. If I hold this, and this is the absorption detector right there, and I got it there also. The buyers are accumulating in this leg. It's these icebergs. Now, nobody knows if the sellers are going to, it's like Pac-Man. Who's consuming who? The sellers are in control here, but the buyers are consuming them. So what I tend to look for, and I have this structure, I'm going to keep coming back to what's in material here, this. So I've got alignment. What I don't know is what happens here, of course. So I see my sellers again. So this is resistance. This is support. Now, I'm going to draw another little box around this for you so you could kind of see the consolidation. Let me try this here. Now, again, I'm not doing this when I'm trading. I'm doing this so you can see structure, because this is structured trading. So right here is too low. There's my volume. There's my absorption. There's my break high. That's a trigger in the Trader Lab. Clueless. This drops down. That's trouble, because we can do that. And when I see that, I have a problem. Now, what I do know is this structure right here. I'm really going to get down into Fractal, but I just want you to see how these pieces might fit together. So this is a consolidation, break high, pull back to the top. That's a breakout, and it's a trigger. This little consolidation here is the same thing. It's a breakout and a pullback. So I get a breakout and a pullback, breakout and a pullback. So I got support here. Now, so I come up to this resistance. I get my sellers here, which disappoints me naturally. And I come back to support, which is here. So I have the outside edge of this consolidation here. I have the outside edge of this micro consolidation there. And I have the micro high volume in there. So I know if I come into this, it's a potential long, and I got to clear this. But because I've got that, it's my long. Now, that might not be a trade most of you guys can take, okay? But let's just follow the yellow brick road here. We take out all the resistance. Now we're coming to settle. So the trade I took from 60, this is the same trade from just the next level down. Same trade. And now we're going for a statistics. 77.5. And what is our target? Yesterday's high, 85% probability, and this so far. That's the target, and I bailed out right in front of it. That's it. Now, we have other trades in here. By the way, any questions? I know I've been kind of going for a while here, so I'm going to stop now and look at your questions. Hope you're getting something out of this. Forlot Tony is asking me a question. Why we didn't take shorts, continuation trades, when this migrated down. Because of this. And remember at the top of the chat this morning when I posted what did the market do? What did it not do? Yesterday, this is today, okay? Yesterday, what did we not do? We did not take the stops out here. We did not get under there. That means there's accumulation going on because the weak hands have their stops right there, and we didn't get to it. That's why I had a target under here yesterday. It was actually this. Didn't get it. So what does that tell you? If you can't take out one side, and then you close on the high, and then today you open lower, get sellers in, and take out weak longs coming down to a level at 60, then you want to get long, not short. You got to stay in multiple time frames. In other words, it's very easy to get myopic. It happens to all of us, by the way. That's why I write out this little drawing, and it's so simple that I showed at the top of the stream. If it goes down first, I'm going up. If it goes up first, I might be going down, depending on, we might have opened lower and gone straight up. Or, what we did is we opened lower and went down. That makes the longs even better because now we're trapping the early shorts, which become buyers, which takes us up to here, which is my target. And that doesn't mean it's the high of the day, but 86.5 is my target for the longs, and this is today. So we went down to 60, support, and the key piece is what happened yesterday. And then the statistics. 85% probability-ish, past performance not indicative of future results. We take out either yesterday's high or low. We didn't take out yesterday's low. So, turn the barge around, get long. Hope that answers your question. So, that makes sense? How are we doing in YouTube? Hey, Louis. Okay, Tom, how do you draw MCHVN, particularly 60 and 45? Because I saw other HVM. Okay, I'm getting a question about this. Well, here they are. They're right on the chart. That's an HVN. That was the 60. This is the next high volume node down, and that's what they look like. These are like consolidate. This is a consolidation. So you have low volume node right under this high volume node. So, and 60 was an obstacle. You know, we were trying to get below 60. Trying to remember from where. Over here. Short, and we couldn't get there, right? But I also, when we were talking about these days, saying if we get under 60, then this, and that's what we did. When we cleared 60, we went all the way down here. And by the way, there's no way to know that's going to happen. Because for me, at the time, this was my target. And this right here. So that was the end of the shorts for me on this day. Because nobody can predict anything. But, so anyway, does that answer your question about, okay, I did? Okay, great. All right. So, and it works from both sides. So if this is the microcomposite volume point of control, in other words, the highest volume for this, when I go down in fractals, this is the highest volume in this distribution. So I target that because it's the same shopping experience. If this is too low, 45, and I come back to it, and I come back today because we rejected it yesterday, and again, we didn't take these stops out, I want to be a buyer. So there were no shorts for me today, just longs. Doesn't mean you can't trade short, by the way. And this is the highest volume, so this is a return to the mean. Let me give you some concepts here. This is mean reversion. That's outside in trading. If I get too high, I will potentially revert back here. This is resistance. So I can come here and just slosh. I mean, whatever it's going to do, it's going to do. We don't know that, of course. Part of the thrill of being in a random environment. So anyway, get to the settle, overnight mid, and the overnight mid, remember, has a statistic of 83%, overnight VPOC, 83%. Yesterday's high, 85%-ish. You got to vet these for yourself. And the stat about the high or low, and this is really, let me just find it here. There's only about 8% probability we take out both the previous high or low. So if I don't take out the previous low, doesn't that kind of suggest that then we're going to take out the previous high? And there's an 85% probability we take out one of them. That's why this is a target, and this was too high previously. That's why I got out of my long here. Now, let me take you a little further along. So we come up here. Remember, this is our primary target, and then this is our 85% probability, and then up above. This is all Trader Lab trading. Now, of course, the joy of everything in trading is who knows, right? Hope you know you don't know. Because if you think you know, I'm going to suggest you might want to change your thinking, because it is much better. I mean, when I first started trading, I thought it was about predicting. Hey, it's going to do this, it's going to do that. And you put that in your head and you close your mind off to the other possibilities. And then you have this need to be right. And your mind is going to filter out things that don't align with your belief. I found, and this took me a long time to do because I grew up at the CME, my first education in trading, other than reading Reminiscence of a Stock Operator, first book I ever read, was to go to CME and take classical bar charting. And that's all measured moves, you know, head and shoulders, triangles, pennants, all that stuff, rectangles. So, so you learn that, and that's measured moves are predicting, aren't they? So I thought it was a prediction business. So I started out and spent time predicting what was going to happen. And I found out that didn't work so well because sometimes it would, sometimes it wouldn't. And that created random outcomes. Now, everything is random in trading, but one of the problems, and at least it was and I only talk about me because my journey is probably the same as yours to some extent. I found that everything works sometimes. In other words, the measured move gets hit. It comes, or head and shoulders is an example, a very basic, simple thing. Comes back to a neckline. Look at that. It stopped right there, and then it goes to the measured move, right? Oh, this is wonderful. I'm going to do these every time I think I see a head and shoulders. And then you start doing it in different time frames, right? So it would work sometimes. Everything works sometimes. Even if it has no edge. Close your eyes and push buy or sell. It's going to work sometimes. I call that Trader Groundhog Day because we are going to continually try to make something better, even if it's a defective process, because we believe, underlined, I should say, believe that all it is a matter of making it better. If that's what you're doing, I'm going to suggest you might not be doing yourself a favor. Now I'm going to show you some longs here. We have what's called structured trades in the Trader Lab. And I know you guys have seen these before, but they look like this. And there's 60 PDFs of these. And this is all what I'm talking about. Now, I did these many years ago. I'm not a vendor. There's no cost to become part of the Bookmap Discord Trader Lab community. There's some on Orderflow and some other things. And I did these because traders were saying, what are you doing? And there's some days I ask myself, what am I doing too? Just like you do. But over time, it's about statistics and probabilities. This is a gaming business. Just don't forget that. Gaming. What is gaming? Probabilities. There's no control in the casinos over the cards that come out of a deck or how gamblers play the cards. So they're in a completely uncertain environment. So what they do is they just play the games exactly the same way. And that's the only way they extract their statistical edge over a random outcome. So they don't know what's going to happen on the next hand. The gamblers walk out with suitcases of cash. They don't change the game. Okay, they just keep playing the game because the only way they get the dollars extracted from the gamblers is to play the game and not change it. We don't do that. We're always changing it. We're always reacting. If we get stopped out, then we'll skip the next trade or we'll move our stop to break even when we shouldn't or whatever it is. Or we get FOMO and all this lunacy goes on. And we take ourselves out of the business. If you treat this like a gaming business, you change and you can teach yourself to see losses like cost of production and overhead, not a personal failure or the inability to predict something. You cannot predict anything. So what we do in Trader Lab is we have something called structured trades, which is a way for developing traders to anticipate trades long before they get there. I anticipated 60. I anticipated 45. Once the trade shows up, I put my helmet on and I trade statistically. Yesterday's high, and don't forget the 86.50, which currently is the high of the day. And I'm going to tell you, no clue. Not my job. This is a structured trade. Now the trend is up. Statistics are open above me, and I am looking to get long. Where do I get long? Well, I have a couple. Now I'm going to tell you, I took a long here. Now, this is me. This is not a structured trade. I'm just going to show it to you just because. Why not? Now, I do other things, right? Only because I've been doing this longer than most, all of you probably, going on 45 years of trading. So I know right here, I see the delta. Let's just look at what this says. This is order flow. Let's look at language. So I'm above the settlement and I have my statistics open, 5% probability. I'm going to take yesterday's high out, which at the time I hadn't done. So I'm going, come on, Lewis. So I see selling here. I see selling here. And what do I see here? Buy icebergs. I rotate up. Now right here, no clue. I come down again. I see selling. Here I see absorption. So, and now I see my buyers. So what does this tell me? Passive buyers are here. These sellers were absorbed here. I break high, a trigger in the Trader Lab. Now this is advanced. I'm just showing you something interesting. break high, pull back here. Passive buyers are here. I take along here, scale here, and I'm looking for yesterday's high. This is the trade I took. Okay, not a structured trade. This is a Tom trade, and because I can read this order flow, and I know if I clear this, then I'm on my way to yesterday's high. So look what happens here. So I get scaled. My stop is under here. Looks like it's going to be okay here, and I take a stop right here. So I took a stop there. So and so. Now this was an ad for me. All right. So here I come back to the VWAP. This is a structured trade. So I'm taking the same trade, this trade, from now out here. And this is a structured trade in the Trader Lab. You can learn this one, and you'd be waiting for it. So right here, and I know many of our Trader Lab participants took this trade because it's something we work on. And the thing about trading is you're not making it up. You know where your trades are. Your job is to wait. It's just like the casinos. They don't make the games up. They just wait for somebody to sit at the table, and then they play the game the same way. So this is a long, this is the scale, and then out the top for the statistics. Let's see how it works. Scale is here. So the trade I took from here, because I read it, was to here. Same trade. Then we came here. It's the same trade. Long from here back to here. But this time, watch. Where am I going? Here and there. Okay? So that was the long, and that's the last trade I took because I'm here with you. And there we are. Any questions? Guys, this is Trader Lab. And I believe anybody can learn to trade if they do the work. Doesn't mean you can, but you can learn if you put the time in. And this is not a 3-month process and you have an ATM in the basement. This is really different because it is not what most retail traders are doing. And most retail traders are playing a video game. They will not be in the business. Just a matter of time, because that's what happens to most retail traders. They are under an illusion that it's just the right indicators in the right time frames, and they spend their career trying to fix it. Well, if a process is defective, you can never fix it. You can just keep waking up trying to fix it. And that's a video I did, a webinar I did on something called Trader Groundhog Day. And if you're in the Bookmap Discord Trader Lab community, there's a library of webinars on this process. I think over 100. I don't even know. There's a lot of them in there. And those 60 PDFs that you can download of these structured trades. And the idea is I'm not a vendor. There's no course. There's no cost. It's the community that makes this thing work. So now here's another thing. Now this is not a trade I would take, but if we hit the target, let's use some logic here. If 86 is too high, might that be a short back to here and then to rotate? I'm just asking. Why might it be a short? Now, I'm not calling trades. I don't do that. You don't need to take my stops. Let's look at this. If 60 was support and we broke it, and microcomposite variable high volume node, I made the terms up. Don't worry about them. They're high volume areas. And this is the next area, 45. So that's too low, but it wasn't. And then this is the next level, too low. And then all my statistics say long. And then I come all the way up and I come to the opposite location. This. Now I can keep going, but we did take the overnight low. Let me throw another statistic out at you. This is how you put pieces together. We took out the overnight low, and the probability of taking out both the overnight high and the overnight low is about 22% probability. Okay? Taking out yesterday's high, we said, because we didn't take out yesterday's low, was about an 85% probability. So we got that. The next resistance is this, which is why it was my target, right? As you can see. Now, what I find about the auction, to put it in a very conservative way, it blows my mind. Because I always thought early on, remember, measured moves, support, resistance. And I didn't really, and this was really foreign. And I learned it from the guy who created Market Profile, Peter Stottlemyre, back in the mid 80s. And even then, I didn't understand it. I just saw, charts and they looked like you landed on Mars. And I tried to integrate it with my systems at the time. I built trading systems. I was a money manager, so I had to have systems. So across asset classes, and it wasn't this. It was swing trading and trend following. So a lot of currencies, bonds, anything that would trend. That all doesn't matter. Dollar, but currencies and currency spreads, a lot of stuff. Anyway, I didn't understand. And when I started getting into this, it took me a while. And I started observing different behaviors than what I thought would happen. And I started changing my beliefs that this was not an indicator-based business and that I couldn't predict anything. But what I could do is detect behavior and try to understand why something might happen. And might is always maybe because there's no way to know. What might happen at a location? If I'm on the longs because 45 was too low, then if this is now too high, then might I take a short when I see a trigger? This is counter trend, by the way, and it's not a trade recommendation, but I want you to see how you can think. Trading is thinking and thinking differently. Now, there's no reason you need to take a short, but if you're in tune, let's look at it. So I'm going to come back, location. What do I see here? Now, what's key about this is this. And I see my seller. So I have chop, chop. And what I'm doing here is I'm going into a consolidation. Now, there's no way to know. As far as I know, we can come here and just, I have other targets up here. Why wouldn't we just keep going? We can come out here. And we could. We might still. Doesn't matter. So let's look at the structure together. So what I'm seeing is this. Selling icebergs. I see selling absorption here. So let's start putting the pieces. Order flow. So I have the sellers here. No idea. What's going on? I don't know. Icebergs. I come back up. Why am I not going higher? This is what I'm asking myself. Buy stops are going off here. Okay. Buyers are here. I see my seller. Buyers are here. I still got my icebergs and I'm still looking for this because I can't pick the high or low of anything. Let's keep watching it. So I have sellers here, sellers here, sellers here. And it's still, I'm clueless. Watch. Break low. Change. Now, where am I? I just fell out of this. Right here. This. High volume is now there. Watch. And I have no entry. Okay? If I enter, and this is more advanced, I'm going to tell you, this is a counter trend trade. You have to enter here. And let me show you what it would look like. And this is more advanced, so this is not anything anybody needs to be thinking about. I'm going to draw my little box here. And so you see what I'm doing. This is the consolidation. So this is the outside edge. This is the outside edge. This is the high volume. When I break outside, I come back here and test this. This is where the buyers were. See them? Buyer, buyer, passive. Passive buyers, passive sellers. This is what creates a consolidation, okay? And what a consolidation is an auction. Too high. And the buyers are up here. They're being absorbed. Down here, we got the sellers. The buyers are here. They're being absorbed there, there, there. You see how it boxes it in? Now, when I break out, it says now these buyers are under the bus. The sellers are in control. I pull back here to this outside edge of this distribution. This can be a short, but you're looking for this. So your stop would need to be here or even here. So it might not, make sense for you to take the trade. But what's important here Now, when I talk about context, I'm just talking this and this. When I'm speaking about structured trades, if you don't have, now here's the thing about a structured trade. This could be a short. Now, why would it not qualify? If you understand context, you'd be considering that as a short for a reversal and get the stops out of these longs. This is the retail price in the developing daily time frame. This is a retail price in a higher time frame. If it's too high, what do? We come back here. If we come back here, where's the stops? Here, and possibly we can rotate out here someplace or not. This is the retail price in an intermediate time frame, which is equal to this. This is called mean reversion. We're coming back here. And the longs off 45 were mean reversion to come back here in that time frame. So this is too high in the intermediate time frame, back here. 45 was too low, back here. Then the stats, then too high, then back here. So if you took a short, you only got this. So why might not? You might not take a short because of the range. That would be the reason. But for me, never mind for me. It just depends on your trade plan. So this is mean reversion to there. Then where's our fuel? VWAP, mid, and here. And we'll see what it does. This could be a short, but it's very aggressive. I find, and this is not a recommendation, for me, if I need location, for me, if I get involved here, let's look at the structure. This is the breakout. This is the test. This is where the structure is. It's right in here, this high volume. Let me just try to get that for you. So I know it's getting kind of busy, right? So breakout, remember the buyers were here. Breakout, test, too high. Now microstructure is in here. Sell. So I can short this. Stop can be here or here. And then I'm going in here and lower. And the reason is, remember, the market goes up to go down and goes down to go up. Where's my swing? It's out here. So I'm looking for it to come under here and get this swing. So right here is the swing. What's under the swings? Stops. Let's see if it gets there. Oh, we are there. Oh, lucky me. So now if I can get under here, and there's the buyers, sellers are here. What we need to have for this to continue is to get under here and keep going and then come down to the next area, which would be here. You guys have questions? This is Trader Lab. This is auction. This is market mechanics. I use no indicators. What I use is the behavior of the participant. So I'm still using tools. But what I've done is I've removed the conflict and the ambiguity. I cannot remove the randomness of the rotations. I cannot remove any of the uncertainty. That doesn't exist in this business. What I have done is remove the conflict of one indicator saying long, another one saying short, another one saying ask again, all that conflict. And I've also removed tuning, tweaking, curve fitting. I don't have any of that because I've already done it and I've thrown it all away. Didn't work. Now, the problem is everything works. It just doesn't have a statistical edge. Now, remember, we're at our outside edge. This trade here could be done right here. See the behavior? I've got my buyers here. I've got absorption here. I had sellers here. So this trade could be done. I don't know if that's worth your time and trouble, up to you. But I want you to understand the structure, why we would come here. This, from here to here, is mean reversion. This is the mean. In the shorter developing time frame, it's the same. This is mean reversion here. So I have two time frames that are in alignment at the moment. A higher time frame, back to here, and a developing daily time frame, just based on this structure, back to here. If I can get below this buyer here, which might have only been short covering, we don't know, then I can come back here. And then I'm looking at this. So it's if this, then that. If this is too high, then that. If not, then what? If I don't get below here, then what? Then potentially back up here. If I do get below this, then what? Then maybe down here, get the stops under the VWAP. Does that make sense? Louis with the one lot, hi, is asking me, I'm not sure what stock. Oh, there's somebody in here with something I have no idea. Louis, do I consider option gamma information for? I don't. I have used the gamma. I'm a minimalist, so I don't want conflict. If it's consistent, sure. If it's random, I want nothing to do with it. Because if I have numbers, and I have used gamma levels, if I have a number here, that's going to not keep me here. It puts me in the prediction mode. So as a personal choice, I don't use it. I'm sure it has value, but the only way you know is statistics. So I'm being a minimalist. I don't want conflict. So I remove as much randomness in my behavior, because this I have no clue, except I know market mechanics and I know I got this. So this short is doable. And this is my support, remember? So the short would be like the here or even the here, and then you're just trailing. And then I use micro high volume structure. So now here I've got high volume in this structure. I'm going to put a little mark on it. And I am below this, which is the mean. So I can now come to the outside and potentially come back or not. I mean, this might be the high of the day. I have no clue, and it's not my concern. But let's take a look at how this trade will work. And these are not trade recommendations. This is Trader Lab. And the other part of it is your trade might not be my trade. The point of the Trader Lab is you find out where your trades are, and you find out if you can execute consistently and have a statistical edge. Same as the casinos. Not the outcome of the next trade, not predicting anything, because they can't, we can't. The reason I talk about casinos is because they have a proven business model. Retail traders think somehow this is a video game and that now they're going to have an ATM in the basement with indicators and time frames. I'm going to suggest, as much as we might want to believe it, that the success of retail traders is poor. And I'm using a very generous term. Why is that? Because they're all doing the same thing. So instead of doing what they do, let's understand what they do. Let's not do what they do. Let's use what they do and all the dollars and time you've spent doing what they do, and can you learn from it? Because I consider that, and I use a term called trapped equity. You've made an investment in education. If it's not successful, and you keep waking up with Trader Groundhog Day thinking it's just a matter of tuning, tweaking, all that, which we've all done, Trader Groundhog Day, and then you wake up at the same place again. Is that a process you want to continue? Or do you want to glean something from that experience? Remember, our support is over here. Right? Now, if this comes above here, the trade would be over, and that's that. It's just one trade, And yes, it's counter trend, but we got our target, see? So in the Trader Lab, there's a couple things you can do. You could take this short, or you're done. You could be done. Go to lunch. Or wait for another structured trade. Nothing else to do. So the point of the Trader Lab is the traders that come to Trader Lab have already done what you've done. And what I've done. We've all done the same stuff. There's no secret sauce or holy grail. I'm sure you guys go all over the internet and you see all this stuff. I'm using a generous word here. about the only thing you need, or only do this, or, this works 90% of the time, how I made $1 bazillion in 20 minutes. This is all you need. It's nonsense. Snake oil has been peddled since they discovered snakes. It was the same when I started in 1980, except then you had to pay big bucks to go to a seminar. We didn't have computers. We didn't have the internet. Nada zippo. You buy a book. And some of the books I bought early on were like $100 for a book. And you're so desperate to try to get more information. When I started trading as an off-floor trader, all my friends were floor traders. I didn't know any off-floor traders. I basically got brought into business by one of the largest grain traders in the world. And he brought me into the business. And my goal when I first came in was to get a seat like everybody else, So in the meantime, it was, I remember going up to his office and, they have the basic quote machines and they had some charts, At the time they were terminals. We didn't have, this was before I think CQG started, because one of my first platforms was, I can't remember, it might have been a CQG, but it was one of the first technical analysis things. So here's all this stuff. And then I shared an office, by the way, with George Lane, who created stochastics. So an oscillator. Oh my goodness, there's the holy grail. If any of you guys have played with oscillators. So I get a chart book once a week, like on a Monday, and all your markets would be in there. And we didn't have candles back then. It was open, high, low, close. And every day you'd put in the daily open, high, low, close every day. So now you'd have your chart and you get your ruler. I still kept it as a souvenir, and you draw your trend line. That's how I started. And then George had his stochastics, and that was a new thing. So we had moving averages, and then stochastics or oscillators are derivative of moving average, and a bazillion other things. Wells Wilder, all that started. So I got very involved in technical analysis and then built trading systems. It took years. So that's where I kind of came from. So I was in this prediction thing and thought that with the right tweaking and tuning and the right conglomeration of indicators that I would derive statistics. And because I worked with Ralph and Bill Cruz out of Miami, they created something called TradeStation. But early on, before they had TradeStation, I worked with them in basically, what's the word I want to use? Testing an end-of-day TradeStation. That wasn't TradeStation. It's called System Writer. And it had their easy language. So I was able to write code in that, quote, easy language, which hit yourself with a cast iron frying pan, easy. And this is before they had functions. So all this was in development. So I worked with those guys. So I had my hands on a end-of-day tool. So and anyway, I don't want to spend a lot of time with that, but I figure as long as we're watching the market here, I should just give you a little background. And then eventually, I started doing more and more, and then started managing money and became an advisor, and then had my own firm, and et cetera, et cetera, et cetera, more and more and more. And there's a lot more, but that doesn't matter because today's market is not yesterday's market. Remember, there's no electronic trading. I'd write an order ticket out, you'd time stamp it, would be written by hand. And then when I was trading size, when I was managing money, I'd pick up a phone, call my guy on the side of the pit, wait for the fills, all that kind of stuff. So that's where I came from. So, and that's only for background. It doesn't give me anything more than anybody else has today, because everybody has the same thing. What changed for me was in the mid 1980s, when I got involved with market profile when it was licensed by CBOT. So that's when things really, because I already had concepts that I developed on my own, but I didn't have full picture. So anyway, enough about that. Let's see, have any more questions? Easy buy and sell is asking me VWAP to VPOC. Does it matter? Yeah, it does. For me, the RTH is the current auction. So I use the RTH VWAP for the VWAP to VPOC trade. I think it was wherever it was, out here to here. But when we open and the full session VWAP is the VWAP and the RTH VWAP doesn't really exist yet, and I have the overnight volume point of control, I will use that full session VWAP to VPOC. It's the same trade, but I'm kind of taking it at the RTH open, but I'm using the structure that was created in the ETH. Now, that's not a structured trade I talk about, because what most traders do, they don't understand what FOMO is. They really don't. They don't understand FOMO. And here's how it manifests itself. In the Trader Lab, there's a fair amount of structured trades. You guys call them setups. To me, they're not a setup. They are structured because all these pieces have to come together to qualify. And I have those 60 PDFs of all this stuff, and there's tons more information in the Trader Lab that's available to all of you guys at no cost, right? Traders come to Trader Lab, they're all excited, and they basically have a smorgasbord of structured trades. Instead of developing one trade and doing what it takes to understand process so they can replicate a process starting with one so they can build a template, instead of doing that, they start trading 5 of them or 4 of them, and they blow themselves up. That's FOMO, because they don't even have the discipline to say, hey, I'm going to an advanced degree in trading. You're going to be a doctor. What do? Are you going to be doing open heart surgery after 2 weeks? No. Are you going to play at a high level in a professional sport as a walk-on? No. What are you going to do? Sequentially and methodically train yourself. Follow a proven process. Break it down. Learn which games or structured trades, where they show up, when they're qualified, how to manage your trade, how to get risk neutral, how to target, and then see, can you develop over a large sample size a statistical edge, and can you replicate it in real time? First of all, sim, then real time with micros, and then up you go from there. Then you add another one and another one, because you have a plug-in template of process. And guess what? Most mere mortals cannot control themselves, because it's all about greed and FOMO. And you know what? You don't even understand the things that are driving your behavior. And even if you become conscious of them, the drive and the emotional triggers are so powerful, they overwhelm your conscious mind, and you do things that are not in your best interest. I talk about it all the time in Trader Lab, because it's part of our humanity. It's not, and I, for many years, wore a thick rubber band around my wrist. And when I would make errors or I'd have bad thoughts, if you know what I mean, I'd snap it, because I thought behavior modification. I was trying to change my behavior, so I would snap it. And in spite of all the snapping and the sore wrist, I'd still make the errors. So I had to come up with a way to change my behavior. And what could do that? What could do that? I came up with something called the error cost calculator. Because in the end, this is about dollars, right? What is painful? Well, apparently the rubber band wasn't painful enough. And the thought of getting a cattle prod might have been overkill. I thought about it, truly. I was going to zap myself, or maybe a taser. They didn't have them back then. So I said, well, what can I do? Error cost calculator. So I started adding up my errors. Failure to take trade, moving the stops, bailing out, all the crazy stuff. Taking a trade where it was like FOMO, all that. And I started putting $1 to it. And what I found was, over a month, I might take $10,000, $20,000 and basically throw it away. That got my attention. The rubber band didn't get my attention. Journaling, very useful and a key thing, but out of sight, out of mind. Oh, it's a new day and it's in my journal and it's gone. I'm now in the present moment. So what I did is I added it up. I kept it in an Excel spreadsheet, and then I wrote a checkout. and I pinned it, I put it on top of my monitor. So every time I'm looking to do a trade, I'm looking at $10,000, $5,000, $20,000 gone. That did it for me, because that was so repugnant to me to see that I was basically giving it away. Do you want to give your dollars away, or do you want to keep them and give some to a charity if you want to give dollars away, but don't just throw it away? Is that useful conceptually, guys? The difference between a tool and an indicator. Well, Louis asked me what's the difference between a tool and an indicator. I don't know quite how to answer the question, because tools, this is, for example, I'm seeing the iceberg. Is it an indicator? It's an indication of behavior of a participant. Okay? What is an indicator? I think of indicators more of mechanical, red light, green light. You know, something crosses over. Okay, it's an indicator. You got a moving average. Well, the moving average crossed over. All right, it's an indicator. An oscillator is an indicator. Whatever you want to make an indicator, but it takes the way I think of an indicator is Google Translate. It is translating participant behavior. Now, this is not telling me to do something at all. My read of the behavior of a tool is not an indicator. Now, you might say it is an indicator, but it's not telling me to buy or sell anything. Is 60 an indicator? No, it's a level created by participant behavior. That's not an indicator. Or 45, which was the next level down. Not an indicator. It is participant based. Then I'm using the auction, the participant behavior, not as an indicator, but as an order flow. Because like right here, this is too high. This is micro high volume structure, trigger, pull back and test. Is this an indication? It's an indication that these sellers are active here. And if I can get under, and this passive sellers are active here and here. If I come back here, now this is not a good place to sell, by the way, because it's retail, balance. But if I can't get above here, I'm going there. That I do know. So I don't use indicators in the sense, I use information. There's a difference. I hope that makes sense. Is that clarified for you? Do I get rid of, Dan is asking, do I get rid of profile levels from previous days as price reaches them? How long do they stay? Well, the previous day, let's just say the previous RTH is the last auction, the last behavior we have of the participants. Then we get the ETH. What does the ETH do in relation to the previous RTH? Because the ETH is the most recent auction. Then we open, and like today's RTH, where are we in relation to yesterday's ETH? I cannot show you, I'm sorry, RTH. So, and I can't show that to you, but what I do is I relate it. So when you say levels, well, yesterday's high and low is a level. Yesterday's volume point of control is a level. Yesterday's, so ETH high, low, yesterday's high, low, yesterday's VPOC, previous day, you know, so wherever the swings are, that's all relevant. But as for, and low volume nodes and high volume nodes in the previous day. Now, why would that be relevant? This is relevant here. What happened here? This is an auction. This is too high. I'll see you later. Where do we come back? Mean reversion. This is the mean. So I'm going from here to here. Now, the question becomes, if I take the stops out, which is what we were going for, and this becomes too low, and I can't get here, I can come right back here. So if I'm staying short, and this is I call this a counter trend mean reversion trade. But what makes you a little nutty in all this, coming back here was also mean reversion. To this fractal, it's too high. Coming back here is mean reversion. coming back from the bottom when we found too low was reverting back here in that time frame. In this time frame, if that is too high, I'm going to come back here. They're the same. It's rotational trading. So I'm going outside in, and I can come, once I'm in this, I can do anything. It could come down here, or it can just stick right here. And maybe if I take this out later, I got another target. And remember, my job is not to predict anything. Now, the probability of getting here is like 22%, not high. I have stops sitting up at 5,900. It's a recent high. Let me show it to you. So all these levels that I have, remember 5,900, it's this high, and that was resistance. This was on the map. This is an outside edge of a distribution. This existed when I came here. That was a short in the Trader Lab. Very nice. What are we doing now? We just came up to this level, and it could have stopped here, but why not? Yesterday's high. So since yesterday I have stops here, then I anticipate, because that over 80% probability of taking yesterday's high out today, which is this, and then coming here. If I can clear this, then I got that. So later today, if I come out, I have to be aware of the possibilities. Doesn't mean it will. It's not my job. I can't predict. It might. And if we come through here, and we might only just come through and fall back to here because it's the mean. But if I get some traction, now I got stops here. Remember what we didn't do down here. These stops were my target yesterday. Get down here. We didn't do it. That says accumulation. What's down here? Well, we had sellers here. What's up here? Same thing that's here. Buy stops are here. Buy stops are here. So from an auction perspective, and it doesn't have to do it now, ever, never, it's just about maybe. Write that down. All you got is maybe. Maybe if we get momentum, we might get here, and it might not happen ever, or it might be tomorrow or whenever. So if the market goes down to go up, and then goes, and then today it went, and then yesterday up, no, I'm sorry, I keep forgetting this, down to go up, and today what did it do? Go down to go up, and now up to maybe go down, or whatever. But the trend is up. Anyway, I hope that answers your question. So I'm not in the prediction business. Wouldn't it be nice? But no, Magic 8 Ball says, ask again. And I say, what's it going to do? So remember, this is too high. This is retail. If this is too high, and there's my line right there, where am I going? Here and maybe here. I don't know. Not my job. What is my job? Put my trade on, follow my plan, get risk neutral, manage the trade. I can either come back up here, or if I can't clear this, and you see the selling, then possible down to here. Where's the stops? Under the VWAP. If I get under the VWAP, what do I got? The mid and a variable high volume node. All part of the process. So for me, I am not, now there's possibilities here. If we clear the stops out here, there's a possibility to come here. It's the same thing, VWAP to VPOC. Also, we have to come over here. Stops are under this swing. So I can also come out, take this, and come down to the midpoint. So that's the current lay of the land. Remember, I can't call trades because I'm as clueless as everybody. All I do is try to stay in alignment and anticipate behavior. I anticipate there's stops here now. So does that mean I mechanically get long here? And it might be a great long to come back here. This is the mean. But let's come back to my statistics. I already got this, and this is too high at the moment. This is the mean. I'm below it. So I can come out here and maybe come back here, or just, who knows? So I got this to be thinking about, and I got this. That's what I got. Final questions, guys. I got about 5 minutes. I hope you're getting something out of this. This is the Trader Lab. And I think there isn't a better community that I have found anywhere. And you can see what's going on in here. My take is a lack of passive defense lets the market trend, you know, charts, graphs, all kinds of stuff going on in here. Here's the question about what I was just talking. Would the overall context disqualify VWAP to VPOC when it occurred earlier? That's the long I showed you before. The question is this disqualified? Well, I hope I answered that for you. Maybe. TraderLab. You interested in TraderLab? There's a link in the bottom of YouTube. Here's me. I post in here also through the day. Why? It's a team. Here's the chart. A lot going on here. Go on and on and on and on. This community is active 24 hours a day. We have traders all over the planet. Well, a lot going on. So, you're interested in TraderLab? Sellers have been absorbing ahead of yesterday's high. Stat is still open. See? On and on and on. It goes and goes and goes. That's TraderLab, guys. If you're interested in TraderLab, there's a link in the bottom of YouTube. There's no cost. You can come to the Bookmap Discord TraderLab community. Not only that, there's a lot of additional education. Stocks, large and small cap stocks, options, crypto, Orderflow with a high tier tool like Bookmap. How do you use Orderflow? What does it do for you? Does it give you an edge? How would you use it? How do you understand what's going on right here? Does this help us understanding why this is too high? Does this help us stay in alignment? Does this help us knowing that this right here might be too high? Does it help us knowing there's stops under here? And does it help us knowing there's stops under here and that this also is potential support? Resistance becomes support. This is a short. Now, if it's not in your plan, guess what? It's not a short. You're working on your crochet. This is the TraderLab, and I invite you all to come visit TraderLab. Any final questions? Remember, these streams in the library of webinars and the 60 PDFs I showed you earlier of structured trades, which are available to everyone, they're all available at no cost. But if you're going to come to TraderLab, you have to find, using the tools I've shared, and I've got 45 years of trading, the tools I've shared, I think, if you put the work in, and many traders in TraderLab will bear this out, and not everybody can succeed because this business is not for everyone. The psychology is ultimately going to be your biggest obstacle. Managing your fear in an uncertain environment. We're not wired to operate in uncertainty. You don't close your eyes and walk across a busy street and in uncertainty to find out if you're going to get hit by a car, right? That's the mechanism that's operating to protect us. The reptilian brain cannot differentiate between a saber-toothed tiger behind the tree and you stepping into randomness and uncertainty. That's what scrambles us. So the way to get control of that is with something called, I call tangibility, and that is metrics. So just like you saw my trade plan and how I write out little note to myself of the potential first move and the levels and everything, all that creates tangibility. So I'm not making it up and impulsing. And if I have structured trades, they have a statistical probability. Each one stands on its own. When is it qualified? What is the condition? And over time, following exactly the same process, do I have a statistical edge? If I don't have a statistical edge, I don't have a trade. If I have a statistical edge, just like the casino, it's my job is to put the trade on and wear a helmet and accept the random outcome. Hope this makes sense. Please give a thumb up if you're there in YouTube on the way out. Give a like. It helps the stream. Remember, these streams are available exclusively to Bookmap Discord TraderLab participants. This will be available. I'm going to make it available to reverse engineer, screenshot, and match alongside what you did today so we can all get better together. And to TraderLab participants, thank you so much for making this a great community. Really appreciate it. Please give that thumb up on the way out and join the Bookmap Discord TraderLab community. There is no cost. You will not be solicited, not a zippo. Thanks again, guys. Have a super day. Look forward to seeing you and meeting you in the TraderLab. And TraderLab, I'll be there in a minute or two so we can continue the journey together.